Good morning, everyone, and welcome back to ABG Sundal Collier's Investor Days. My name is Benjamin Wallstedt. I am an equity research analyst out of the Stockholm office working for the consumer and retail space. With me today, I have Embellence Group and CEO Olle Svensk to present his company. So, Olle, please go ahead.
Thank you very much. Welcome, everyone. My name is Olle Svensk. I'm the CEO of Embellence Group, and I've been in this role for 7 years now. And I have the pleasure to take you through about Embellence Group. I will start to present a little bit about the company, then quickly give you a snapshot of our Q4 result, and then last bit will be questions. Embellence Group then. Yes, we are a company that acquire, own, and develop strong brands. We have a clear house of brands strategy, decentralized model, and we want to take a leading part in the industry to consolidate this industry. So key categories are wallpaper, textiles, and rugs, but also other interior decoration categories. And we are present all over the world, and we have the largest country being Sweden with around 35%, but the rest is outside, mainly in Europe and North America. And what we do then? Yes, we have 5 strong brands with 5 strong identities. First of all, and the largest one is Produktionsteamet, which is the market leader in the Nordic region and in Sweden as well. Classic romantic wallpaper designs, mainly wallpaper, but we have also expanded the collections or the categories into textile as well, which is being rolled out now. Wall&decò is an Italian company, which is, I would say, really one of the most innovative brands in the industry, based out of wallpaper, out of classical wall murals, but also have a couple of really interesting categories where we can do the wet system, which is an alternative to tiles in shower rooms and bathrooms, so it can resist water and humidity. And we also have out system there on the right, for those of you who want to have a splendid, marvelous design on your facade. Cole & Son has been with the group since 2009, if I remember correctly. It's probably I would call it the crown jewel of the brands we have, based out of London, has over the last years moved into not only premium, which is our core focus, but even up to luxury. And it's mainly wallpaper, but we introduced textile and also cushions a couple of years back based on the most loved and iconic designs that we have. Pappelina is rugs. It's now we're in the northern part of Sweden, in Falun. Mainly rugs with clear, distinct design as well. And as we have done with Produktionsteamet as well as Cole & Son, we have moved into adjacent categories, keeping the most popular or most sold designs, actually. And last but not least, a year ago, we acquired Artscape, which is based out of Portland, Northwest USA. They are in the very small but very attractive category of window films. So basically wallpaper designs, I would say, window films for privacy, but also for decoration. They are the market leader in premium in the US, and one of the many things that we saw as a potential here is that we will bring that brand into the European market, which we are working on and should happen during this year. So brand-based brands are extremely important to develop them and to be the clear leader in their segments where they are. So our business model, as I mentioned here before, focus on building premium, and since a year ago we dared to talk about luxury as well. And why do we do that? Yes, it's because that is the part of the market, regardless if you're in textile, in wallpaper or rugs, that we see an underlying market growth, which is always healthy, as you know. Then on top of that, it is also shows resilience, I would say, and we can see resilience in our numbers as well, that the more premium or luxury the brand is, the stronger it can resist the current situation we have right now. But it also offers much better gross margins. The gross margins in these segments are attractive. Last but not least, we strongly believe in decentralization. Then, of course, finding smart synergies in what we do, but to be decentralized, because many of the brands, you know, their local competition for Wall&decò is not the same as for Boråstapeter. Many of the competitors are family-owned and fairly small businesses. And we believe that speed and passion and engagement will always beat the synergies that we might find short term. Our financial goals that we launched when we had our IPO in 2021 was to double our revenue compared to 2021, up to 1.2 billion, having an EBITDA margin of at least 15%. Then we have a net debt target as well, or goal, not exceed 2.5, and we have a policy as well, a dividend policy. So building strong brands in premium luxury position, international growth, that means for us hedging our business, not only being dependent of the Nordic market. Now we have around 60% of our business outside the Nordic. We have nothing against being in the Nordics, but we do believe it's very important for us to hedge our business in geography, in category, but also in channels. Closer to the relationship with key stakeholders, I would argue that we have two key segments or stakeholders or customers. We have the end consumer, especially for Pappelina, Artscape, and a large part of Boråstapeter brand. But then we have what is in our industry called the A&Ds, which are the architects and designers, the ones that specify a hotel like this, or a luxury apartment, or luxury residential somewhere. They are the specifier, and we need to get really close to them and influence them and give them, you know, different tools so they can easily suggest our offering. We have launched direct to consumer into this category. You can argue that we were a little bit late, but I would argue that we are far ahead any of our competition here. It's still fairly small numbers, but we do over the last 6 months, we see a growth that is more than 30% in this part of our business, and with a gross margin that is at least 80%. And we charge for freight, which not everyone does, right? Environmental footprint or decarbonize and reduce our carbon footprint. It's another initiative or another part that is really important for us. And last but not least, we want to have the best people in the industry to us, work for us, and be attractive. So being it in London or in Bologna or Milano or wherever we think we have the best talent pool. I will not go all through this, but remember, we are not only Boråstapeter, we are not only Sweden, we are becoming an international company. We are selling into more than 100 countries every year. We do have a multi-channel approach into the market. We are not only D2C. We sell to customers who sell online. But the ones that, as I mentioned before, are key for us, it's the end consumer, but also the architects and designers specifying projects. And they specify, these A&Ds, they don't sit in Stockholm or in Borås. They sit in London or Milano or in New York. And this is where we spend a lot of money and time and attention to make them specify our brands. All right, moving on to Q4 then. Probably all of you or most of you have seen that before. We had a quite sharp slowdown in the Nordics in the fourth quarter with minus 26%. Europe, was unchanged more or less and actually underlying an organic growth. We are not selling into Russia anything at all before, and Russia 2021 was around 1 million SEK every month. but Russia is nothing for no sales at all for us. And we had a growth in the rest of the world, fueled by the add-on acquisition by Artscape. So net sales a little bit ahead of last year, but it all came from acquired net sales, if you like. The EBITDA was 14.7. The adjusted one, if you take into account that we did launch and implemented a large cost out program in Q4, and that affected us quite a lot short term in cost-wise at least. So we reached 22 million SEK, but we saw already during summer what was probably coming. So that's why we started with this program that was implemented fully and will have a full year effect of at least 9 million this year, and also already started to kick in January. To simplify a little bit the picture of what we saw in Q4 was that Nordics consumer and what I would call mid-market was tough, while premium luxury architects and designers is fairly strong. I mean, our brands that are most skewed towards architects, designer, and Europe and so on, which is Cole & Son and Wall&decò, performing quite well. They are growing organically in the fourth quarter. The mix is changing from retail sales and to more hospitality, but that part is, quite healthy. I had a discussion here before the meeting, and when we look at the pipeline for hospitality, it is not, running dry. I'm not saying that we are closing all of it. Definitely not. But there is a large interest, continue to be large interest into the hospitality segment. I mean, the moving on then, the inventory management and adjusting production has been last year, Q3 and Q4, really important. We continue to want to have a sharp eye on cash flow. That's why we could have, in the fourth quarter, increased production or kept it on a high level, which would have been healthy for our EBITDA. That would probably be 2, 3, 4 million better. But our cash flow lower and our inventory too high. And we don't know what we're heading into now, but cash flow will continue to be important. We're sure of that, and we think it's better to continue to take down our net debt. The board of directors has proposed a dividend of corresponding to 31% of our net profit, and the AGM is in April, I think. I've been through most of the numbers here. I mean, looking at some of the full year, we reached 720 million, which is 11% more than last year, fueled by the add-on acquisition of Artscape. Looking at the adjusted EBITDA was not as good as 2021, but 14.3 is at least healthy, I would say. It's not brilliant, but it's healthy. Our cash flow was strong last year. We did a good job, especially I would say in the Nordics region, but also in some other areas, to look after our inventory management, and that will continue to be a priority this year. Or is that already? Net sales, we're coming from the 560 we had in 2020, and our aim is to grow that above 1 billion, as I mentioned. However, profitability will always be we will not try to reach the 1.2 billion just to reach it if it's not profitable. Profitability will always be the key, the key KPI, I would say. Adjusted EBITDA, as you can see here, last year we had to steer the business differently, especially as profitability out of Nordics came down. Share premium, 67% of our revenue, which is also underlying helping our gross margins. Our gross margins in the Q4 last year, we improved from 56 to 59%. So we are able to it is a combination of mix, but also the fact that we have been able to implement the price increases last year. Net debt 2.1%. If you look at it excluding the IFRS effects, it's 1.7, but it's 2.1 that is the definition that we're using. Nordics, I mean, softer demand. We have implemented cost savings, not at all in the same level here as last year. Of course, in Q4, I would say that most of it happened in October, where we saw a dramatic reduction in order intake, so we reduced production there. I mean, as fun it is to have factories when volumes are up, as careful you have to be when they are going down. Europe, fairly stable market in terms of top line. Adjusted EBITDA not as good as last year, but now we're starting to see more of the initiative or the cost we basically have to being active in the market in the hospitality segment, which drives some cost for fairs and events and others. Full year, not too bad, EBITDA on 17% and revenue more or less on the same level as last year. But please bear in mind that here you had 12 million of Russia, which we didn't have last year. We only had 1.5 in January, mid-February. Rest of the world, all the increase is all coming from Artscape. The adjusted EBITDA was better, but the margin was lower. What we have seen in the business with Artscape has been started already in August, a strong inventory or reduction from retailers that has continued for 5 months almost. They are selling more than they are ordering from us. So they have reduced their inventory quite a lot. And full year, a strong increase there, a good increase here, but not really up to the expectation we have for it. But we're working on that, and I would say I'm cautiously optimistic when it comes to the rest of the world. Our organic growth underlying was positive last year, mainly in coming from the US, but also some other markets. So summing up with the financial targets then, we reached 720. We have full 2023, full 2024, and full 2025. So we have 3 more years to reach above 1 billion there. EBITDA margin reached 12.3, and we should be at least on 15. Leverage, as I mentioned before, 2.1. I think that was it.
Perfect. And we have time for some questions as well.
Great.
We talked about the premium or luxury segment growing faster than the non-premium. Could you perhaps elaborate on the non-premium segment, so to speak? What do you see in terms of consumer behavior there? Do we see down trading, or are consumers abstaining from purchasing anything at all, would you say?
I mean, we have, as I think I mentioned, there are 3 of our brands, especially Artscape, Pappelina, and Boråstapeter, are mainly in consumer there. And the part that is not premium, there is a reduced demand, while the higher part, it is fairly resilient. And we see that in general, but especially in the Nordics. Sweden, Finland is much lower than it was last year, and it's back to, it's even below, I would say, 2019 levels here. And it's really cautious, and we also not that many of our retailers in the Nordics are carrying inventory, but the few that does, they are taking that down as well, leaving more, up to us to be ready to ship.
And I was just about to ask about retailer inventories. So no material effects expected there from any lag?
No, now they are taking it down so much. I mean, so I would be surprised. I mean, we have followed that now for 4 or 5 months, and where we can follow it, we see that they sell more than they order. and that can only come to a certain point, you know.
Yeah, and we're approaching that point then.
Yes.
Yep.
Yes.
You also talked briefly about your D2C, your e-com offering. What are early takes there? I understand that it's a bit of a new.
The early
new effort.
takes is first, everyone asks me how big it is, which I won't reveal. The second is that I mentioned now that it's growing at around a little bit more than 30%.
Yeah.
It's growing in larger cities, which is it's rather, you know, London than Newcastle, and it's we are not an e-tailer. So as I mentioned before, which is, I mean, yes, we have good gross margins. We're able to sustain those of 80-85%, but we are charging for supply and shipping, which the ones that are pure e-tailers, not all of them do there. So it is a healthy business for us. We will never do discounts there. We don't see that we can, you know, it's sustainable for us because we have our D2C business is less than 10%. But it is a complement for consumers who, you know, they live somewhere where they can't find the products and it's out convenience and availability and time, they order directly. That's one part. But the other part that is actually growing, and we opened up, Cole & Son opened up Australia last Friday, last week, in local currency, which is also an important point, you know, to drive conversion. And what were the first orders we got from Australia? We have never sold anything into Australia for Cole & Son. It was all samples and also to designers and architects that use that for the mood board that will hopefully eventually end up as an order, either directly through us or through our you know, local agents. Long answer. I don't know if I answered your question, but I talked a bit, right?
Yeah, it was a very good answer. We get lots of new data points around the D2C offering here. Do you see any differences in the types of orders you receive in a more mature market, so to speak, compared to other A&D orders?
You mean the orders that we are receiving directly from our
through the D2C?
Okay, through to D2C. I mean, it's surprisingly. It's more samples than we thought, especially into US. US now we will go live with local currency for Cole in April. Let's say April, which sales is not bad there, but it will be interesting to see how the conversion will change because right now they order in British pound. I mean, generally the items or the products that we sell are rather the high-end part of our assortment. That's the only thing. But I wouldn't say that we have that many other.
I have one question on cash flow as well. Where are you in terms of investments into production facilities and the like? What should we expect here for the coming years?
We have 3 production facilities in Italy, where we have 3 digital printers. Let's call them printers. We installed them to 2021, totally new. I don't, you know, maybe some maintenance, but nothing major. Cost of them is not great. I mean, a new machine costs 60,000 euros, so it's a lot of money, but it's not that much. In Dalarna, we weave the rugs. We have around 30 weaving machines there. There was a big investment taken by the previous owner before we entered. I don't foresee anything special there. When it comes to our larger production facility, which is in Borås, where we produce wallpaper mainly for Borås Tapeter, to some external brand, a little bit to Cole & Son, we have a versatile production footprint there. We do have in the group now around 24% of our revenue, 26% of our revenue is digitally produced. Right now, we have the capabilities what we need. Having said that, probably not this year, but maybe next year or the following year, we will do an upgrade. Our CapEx generally has been around 15-17 million every year. I don't see anything. You know, what has changed with that is not the amount, is rather that it's more digital, more investment in e-commerce and web platform or digital printing than traditional capex that was it we had before.
So up to speed on capex, premium shares going strong. Sounds like this year
I think
could be
most
pretty good.
of you should just start to cry here.
Perfect. With that, I believe it's time to wrap up. So thank you, Olle. Thank you, those in attendance.
Thank you.
We'll be right back.
Thanks.